Ladies and gentlemen of the crypto space, we're live at 11:31 a.m. on Thursday, February 11th, almost the end of the week, and a heck of a week it's been. We're going to roll into the macros. We're going to take a look at, obviously, the only market that folks that follow me are interested in is the crypto space. Clearly, everyone knows that it's all related, it's all connected. I've talked about the other markets in great detail and what I see playing out, and I'm sorry, I'm getting distracted. I'm in. I follow the Rook Discord channel, and they're a bunch of fun boys. I try and help pretty much anyone, and it's exactly why I do this show. I'm only here to help. I think everyone needs information, critical thought, critical analysis, and needs to deploy strategy that's different than what is prevalent, what is the status quo, we need to get off bottom. We need to be smart money, and that's the whole point. I've learned myself how to do these things, and I always tell folks that I wish that I had someone to tell me how to do these things much earlier in my life. I could have done much better for myself, my friends, and my family. I could have made better choices to more optimally consume my time to get to where I wanted to be sooner, rather than it taking as long as it did. And that's generally speaking why I do what I do. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Today's topic is teetering macro financials, how to assess risk exposure. Let's take a look at the macros. They're right on the line. I posted this morning. My favorite contrarian thinkers was Jeff Schneider, Stephen Van Meter, Brent Johnson. That's pretty much Raul has his tendencies for being contrarian, but he's very anti-tribal. He doesn't subscribe to one particular direction or another. I'm more aligned with his mentality. He follows data. And there's no such thing as flip-flopping. It doesn't work like that. You don't subscribe to something, you follow data. Data tells a story, and all we can do is express that data in story form as we literally see it playing out. Let's pop it over to the main screen and see who's in the stream. Digilites in the house. Noah time, my man. Apple going to put Bitcoin on the spreadsheet. That'd be a big deal. Nobody's going to want to be the last person to get a position. That's just the way it's going to be. It's just the nature of what's playing out, and we see that in the data at this point. Captain Weber's in the house. Triple reverse mortgage risk on. Yeah, that'll do it. That is risk on, boys and girls. I'm not a fan of debt. I do have debt. I use MakerDAO for debt. But the debt generates revenue, and that's called the cash and carry trade, where I'm able to generate more revenue than the interest payments I need to make on the debt. Therefore, it is a good thing. Well, obviously, you buy a house, your house isn't generating revenue unless you're in the real estate market and playing that game. But generally speaking, debt that isn't making you revenue is a burden by definition. Um, Waiting for a super aggregator to go live. I'm not quite sure what you're referring to. 1 inch is pretty damn good in that regard. Did you add any micro cap staking coins you like? I mean, my man, I know a lot of folks are probably just getting their feet wet with DeFi, given that it's an enormous run that's occurring now, and it really started in 2020. We had a brief hiatus between September and January, but all this action dates back to basically March, the risk-off event of 2020. Things started changing, and in May, with the fiscal, it totally just exploded it. Generally speaking, probably what happened was we had Ascent Technologies that started development in 2017, 2018, and then monetary velocity fell off a cliff in September 2019. I've shown you guys that data, and then what happens? Markets gravitate towards opportunity, and what emerged in the DeFi space was an extraordinary opportunity revolving around the fundamental concept of monetary velocity, the capacity to borrow and lend, generate revenue, engage in opportunities, extract value, create value out of nothing, which is a tantalizing notion that we have empirical evidence suggesting that is the case. And it's logical why and how it works. incentive programs and self-sustaining feedback loops and supply and demand logic, incentivized supply disruption, intentional deflationary pressures, inflationary pressure. I mean, synthetics, man, is an inflationary asset, but because of the incentivized supply disruption, it's cumulatively net deflationary. That is an extraordinary monetary policy. The United States dollar has been through was it 4 or 5 iterations over the last 100 years. We've had hundreds of monetary policy experiments explored in the DeFi space. So you're telling me that these DeFi protocols couldn't have done better than something that took a sovereign country 100 years to go through 4 or 5 iterations? Yeah, technology is speed, and that isn't that it's incredible. It's extraordinary, and if you don't see it, that is indeed what is playing out. Look at a couple of charts. It's actually pretty good this morning, the Rook chart. Let's see who's else in the stream. Igor. Oh no, I mentioned you. Micro caps, no micro caps. Heirloom. Just read Badger Dow joining Urn. Yeah, it's a big deal. Urn is a black hole. They're gonna be one of the titans. FUD aside, fear, uncertainty, and doubt aside, they're going to consume everything. They have the network effect. They're going to be a critical component of the DeFi space, along with the AMMs. And obviously, 1inch is not just an AMM. They clearly they provide that functionality, but they're an aggregator, and they fall into somewhat of a maca with ZRX, 0x, and just I get hung up sometimes because even the non necessarily extraordinarily popular AMMs like Bancor with impermanent loss protection and Kyber have extraordinary properties. And Kyber has some of the best monetary policy I could probably think of when comparing to almost any asset in the DeFi space. As I've said, incentivized supply disruption and a burn component. It's a deflationary asset that is actually a non-decaying. It's an increasingly deflationary asset over time, which is extraordinary. Carlos is in the house. He's here for the data. Always a pleasure. Crypto Chick, yes. Quick thoughts on the upcoming Flare network and its uses. Don't go all in. Never spread too thin. You can't own everything you want to own. It's not an asset that's remotely on my radar. Rook Discord represent in the house. So Rook looks good. I have taken risk off the table over the last couple of days. I've actually sold into weakness. Always remember, if something goes straight up, it comes straight down. When something is going straight up, you need to sell portions of the portfolio, 1, 2, 3, 4, 5%. You need to take profits, take risk off the table. Now, I'm getting the sense of big frothiness, which is exactly why I quite often turn to the macro financials. But Rook, this doesn't look frothy. This is an asset that has gone through many days of cost basis reset process. As the price, I mean, come on, the price went from $65 to 500, what is it, 600 and change at the moment? You're going to have a huge amount of persons that are currently sitting in profit. And the process that's playing out is the circulation of assets that are in profit to new holders at the higher price point that are not in profit. And this is the fundamental nature of bull markets. It's that staircase pattern that everyone knows all too well. So once the vast majority of liquid assets, which liquid assets means persons that are even remotely interested in liquidating a portion of their position, once the vast majority of those assets are no longer in profit, there's no incentive to sell. This is something a lot of the big boys, Willie Woo, talks quite often about Bitcoin, he discusses this property about Bitcoin. And then you have the next leg up in the market. So this is a whole process. And bear in mind, it's quite the nascent asset. It's brand spanking new. But you have your first leg, you have a leg here. And look, this is a perfect example right here of that process playing out. You have a leg, cost basis reset, people in profit take profit. You have the next leg, people in profit take profit, new entrants, next leg, and then next leg. And now what you have is a trend formation, and these trend formations are highly indicative of the gross aggregate of the psychology of market participants, and that That's what they are. I mean, we're looking at data. Data TA is not concrete, predominantly because we're humans, and humans are not 100% predictable. But from a stereotypical perspective, we can aggregate data, and what charts are is an aggregate of data that gives us insight into what the vast majority of persons in the market are actually thinking and actually doing. So, what is an ascending triangle? An ascending triangle is a bottoming process. We have higher lows and the same high. So, clearly, there's a lot of persons that still are in profit. So, when it rips to the upside, they take profit. You should be doing the same, everyone. This is the way. Proper respect for your portfolio is provided, but we're getting close. It could fall back down, don't get me wrong, and that's the way trend patterns work. You could easily fall back down, and what you look for with regard to trends is either validation or invalidation. If the trend holds, if you get another hit point on support, that's extraordinary bullish. Um, and that's the way these types of patterns play out. And then eventually you get a break to the upside. And everything I tell you guys, like if I was getting into Rook now and I didn't have a $65 cost basis, the way you get into assets like this is you wait for the breakout, you wait for the retest, and then the higher high. I tell you guys this all the time because there is always a chance of a breakdown, which is why to respect your portfolio, you need to assess your portfolio balance, how much value you've applied to an asset relative to an individual asset relative to the rest of your portfolio. Show respect. You work too hard for your money. You need to protect your value. You work hard for it. That's the name of the game. Grass-fed beef is preferred. That's right, Pete. You know it. Heirloom says, well, you guys are running through it. 794K unemployment. Yeah, I think about that quite often. This plays into the macro financials that I want to get into. And at some point, government's going to have to finance social rest. You guys are sitting back making money on a computer, and the vast majority of people are either out of work or making the same exact garbage salary at a fixed rate on an hourly or whatever yearly basis, and they're going nowhere because you can't save money. The value of dollars, fiat, is constantly depreciating, and the value of assets are inflating. So that's what's going on. So I think we're going to have a great deal of social unrest. I was talking to the captain about that a little bit earlier, and trends continue until they stop and reverse. I tell you that about charts, and I'll tell you that about society as well. And right now, the social trend from the large perspective of society is not heading in the right direction. It's trending towards instability rather than stability and equality. The disparity is pretty heartbreaking. McLeod, I heard Rook. I click like. Yeah, my man. So I love Rook. Rook is an incredible, incredible asset. Folks are flooding the initial MVP deployment. For myself, I've used it quite a bunch, and it's overwhelmingly effective. You pay no gas prices. Come on, holy crap! And the Treasury is accumulating value. It's a limit order, so if you've used limit orders on 0x or 1inch, you're used to how it works. If the bots are able to arb some extra value, you're going to get some additional Rook yield. Come on, this is probably pause. Fundamentals tell you where to look. Technicals tell you when. Something I will repeat time and time again. So you could watch an incredible asset, was it Avalanche going whatever 200%. You have to play the cards that you have. You have to play your hand, and you have to have style and routine and strategy. So you chose to look at an asset. You chose to look at this asset for a good reason, a very solid fundamental reason. Let the trend play out. If the trend is invalidated, you know what to do. If the trend is invalidated, like if you see this white line to the downside, what you do is stuff like this. You throw up a price action support. You throw up another price action support. You're not going to have moving averages for support. It's way too immature of an asset. Oh no, I don't want that. But really, I'm making a mess out of the chart. But you see the price action supports. Let me see if I can put them up for you real quick. Horizontal line. You got to see decent price action support here. You got decent price action support here. Look, 1, 2, 3. This was the triple bottom. Bear in mind, guys, this was the triple bottom, this was the falling wedge, and this is the rip that ensued. So this clearly was a breakout relative to this trend formation. Clearly, there was support. This was a bottoming process down here at this green line's price point, which drove out the persons that were in profit, which is a cost basis reset process, and allowed new entrants to come in that were willing to hold in the face of price appreciation, which drove the price point up to a previous resistance. So what happens is in an ascending triangle, it's like hammering through a wall of concrete, and eventually it breaks. So we keep an eye out for risk to the downside. We understand that trends are only trends and they could go contrarian. We know that, yeah, sure, if you have iron hands, you hold and then let's say, oh, bounce. That's awesome. And then it prints a new higher high. That's awesome. And that's, you obviously had more risk tolerance than other persons, but definitely a failure to. You're talking about massive depreciation if it breaks through this support down to the next price action support. That's a massive retrace. That's a trend going in the opposite direction. Trends continue until they stop and reverse. Higher high, higher highs, higher lows. In an ascending triangle, it's higher lows and a constant high. So there's some interesting observations on the chart. Overwhelmingly, it's a bullish chart pattern. The fundamentals are stronger than ever, and I think the narrative has an overwhelming place in the market. It's undeniable, an L1 gas-free solution. Jesus. And it's nascent. It's literally just started. So have patience and if you are uncomfortable or nervous about your position sizing and you're afraid you're going to lose value, the appropriate thing to do, or the optimal thing to do, is to sell into strength. And if you're fearful that it's going to fall through the floor, sell into weakness. But the whole point is selling into weakness isn't a problem. Sure, you're going to miss out on gains if it bounces and holds support, but selling into weakness and missing out on gains is not the same thing as losing value. So folks think too much on a short-term horizon. If you're down, whatever, $1,000 today, but you're up $3,000 for the week, now you're talking. So you have to expand your horizon a little bit and get a little bit more strategic to achieve the optimal outcome, which is exactly what the damn Rook Treasury does. It goes up and down, but it is constantly going up because they are protecting their gains. Those R bots are extraordinarily intelligent. Boys who created this platform are extremely impressive. Juliang's in the house. White Wolf's in the house. What else we got? Pastured livestock poultry is optimal. I love it. SoCal, my man. You know the deal. Charlie G's in the house. Sup, people? Matthew. Hey, Noah. Torn seems to be getting a lot of buzz lately. Yeah, Torn is Tornado Cash. It's got buzz. It's a governance asset. It's not really on my radar. It's nice, the yield. So I was looking at it obviously from a 1 inch perspective and the yield that's getting offered, but I just don't want exposure to the asset. I don't need the risk in my life. I want the least amount of risk, and I want to take small concentrated bets, which is why I tell people that Rook is my largest risk on position. It is. I got like, small 5-figure positions here and there, but Rook's the large position. I've taken risk off the table recently, but you have to respect your portfolio, and the size of a position needs to respect the amount of risk you feel is in the market. And that's exactly why I look at stuff like the DXY, the 30-year treasuries, and the short end of the curve and the 2-year treasuries. So that's the name of the game, and that's how we do this. And that's why I teach you guys, that's why I like what I do. I want folks to be the smart money and do what's right by themselves, their friends, and their family, and all that fun jazz I always talk about. Lawrence, 30 mil in the treasury. That is goddamn flex, man. Come on, you're talking about software that's extracting value, MEV, from the dark forest and miners. Dark forest is scavengers. They're scavengers sucking value out of our transactions. And miners, they're just like you need them. We understand we need them, but obviously stuff like EIP 1559 and other the L2 solutions and the other L1 protocols, there's much room to grow with regard to gas prices and other costs of transactions. So there's problems, and Rook provides solutions, or keep a DAO rather. So bear in mind, right now Rook is it's not even a governance asset. So there's no correlation between the asset price and something inherent to the system, like intrinsic, I guess. There's correlation, but it's not tight correlation. Rook's price predominantly runs on the fundamentals of the project and the social narrative surrounding it and how it provides solutions to the broad DeFi crypto space. But it doesn't have like an intrinsic value. It's not de-risked. You guys need to understand risk because a lot of things in the crypto space are de-risked. Honestly, Aave's de-risked, Uniswap's de-risked, albeit there's no profit sharing. It's just basically the front runner, and it has the network effect of the AMM, so it's de-risked. 1inch is de-risked at this point. Curve is de-risked at this point. Sushi is de-risked at this point. A lot of assets are de-risked because of their monetary properties, incentivized supply disruption, inflationary and deflationary protocol characteristics. They're basically self-fulfilling, self-sustaining mechanisms at this point. That is exactly the way like the U.S. dollar is created. It's the same type of system. That is what has sustained real-world financial systems for forever. That's literally when people are creating countries and creating financial systems, they literally do the exact same thing that these kids have done in these DeFi protocols. So these are not trivial protocols. They have memes, they have sushi and badger and food coins up the wazoo. This is some serious shit, and you need to peer through the juvenile aspect to the naming convention and see the properties of these protocols that are being created. It's like Elon Musk put fart sounds in the Model 3s, all the models, all his cars. The cars fart. All right. So, you got to see through the juvenile side of things sometimes to see the true value. So we have our eyes open here, boys and girls, and that's why we do what we do. Pellets is in the house. Always a pleasure. Can I ask you to guide me a little bit through where to look, listen to, and approach investing in battery metals? Oh, it's hard. That shit is an old industry. Um, Man, I don't really have any recommendations. That stuff is Oh yeah, I give you one tip. Simon Moore. Simon Moore. And obviously follow people that he follows. And, use that as the rabbit hole. So Simon Moores. This boy runs Benchmark Minerals. If anyone, this is the person who knows what's going on in the battery metal space. And he aggregates a huge amount of information. He provides information about lithium prices to interested parties, and this is basically the nexus of all things battery metal. So I wish that come to my mind a little bit sooner. Heirloom Solid Wisdom. I try and help. I want to help people make better decisions. It took me a long time to get to where I am, and I want to save people that time, as I've said. Crypto check Noah is the inverse head and shoulders on the 4 hour for ETH. Uh, Notice this is the only chart I look at nowadays. BTC USD versus the Nasdaq. Let's take a look. I would imagine you're talking about Bitcoin denominated. I don't really look at the US dollar chart. Oh, Nikes. Well, it's not really an inverse head and shoulders. It's not really a double top. I don't know. On the daily, let's go to the weekly. All I really care about is the long-term time frames. We are overextended as little as it is a little detached from the averages. You notice that there's no 200 EMA drawing on the weekly. It's because Ethereum is a relatively new asset compared to Bitcoin, but we are extended from the 50 and the 100 SMA. Let's drop to the daily and see if we have a 200 EMA. Yeah, so we have nice support below, but there could be a nice mean regression. We are overextended, as you could see. It did experience a fair amount of appreciation lately. It's not a solid double top, and it does seem like there is a floor, as you can see right here. So there's a decent floor right there. So, keep an eye on it. Watch for the 50 SMA to start breaching above that floor, and that'll give you nice confluence that it's a floor. You go horizontal a bit, somewhere around here. Oh. And somewhere around here, it's probably going to be the 50 SMA will be up there by then, and then you have a nice floor, and then you have confluence suggesting that is more of a bottom, more likely to be a bottom than less likely to be a bottom. WSS didn't listen, never selling. The only thing I can say in that regard is please don't marry bags. Love projects, appreciate them for what they are, and do right by them, help them, and do what's necessary for projects to make a difference to financial systems and the participants in the ecosystem. But also do right by yourself. So the whole point that I always try and express is do right, do good, help people, share knowledge, share ideas, and try and prevent people from doing things poorly and doing things that are not even in their best interest. I see it all too often in the crypto space, complete and utter irrationality. And that is what we need less of, not just for people to do financially better, but that helps us make a better society. People need to be more rational. Um, Fran says, love that you explain TA, more of that, want to understand TA and patterns of the market. So obviously I'll continue applying TA to particular assets. I won't necessarily go too much into education about the specific trends and patterns, but generally speaking, if just keep listening, you'll hear me explain everything that I encounter, all the patterns and the meanings of them in detail over time. You'll be exposed to it. So Bitcoin looks solid. It does look like it does have a top right around here for a bit. It's breaking out nicely this morning. But this is Bitcoin against Nasdaq. So Bitcoin is broken out against the S&P, but this is what I have my eye on. So I wouldn't be surprised if we see chop, a little bit of sideways chop, doing stuff like this for a bit. But eventually it should break out. This is an extraordinary chart. This says Bitcoin is outperforming tech equities, the Nasdaq stock market, the QQQ index, which is a gross aggregate or a basket, an ETF of a fair amount of the large equities in the Nasdaq. And this is probably the most meaningful chart to me because Bitcoin has broken out against gold. It's broken out against the S&P 500. It's broken out against the dollar. And who really cares about the dollar at this point? So this is probably the most interesting chart for me right now. And this is what I follow. In fact, I might actually have to subscribe to get the lower time frames. Albeit, I don't mind not being subscribed because it forces me to just look on the daily. And the long time frames is what I give a crap most, or I give most a crap about, some shit like that. So what's awesome about this, as I always tell you guys, a breach to the upside through the previous high, the breach through resistance, the retest, and now we're just waiting on the higher high. Technically, it did barely wick above the higher high. But it's nice at least to see the green candle post the red candle body close yesterday. So how much is left? 7 hours. If in 7 hours this candle closes green, this chart is heading in the right direction because that means today's candle body closed above yesterday's candle body close significantly, even above where it started when it wicked at the top. Most fascinating chart that I could think of at the moment. Dollar's bearish this morning. It's wicking back up from the bottom. Notice it hit all the way down there. It was at 90.2 and change. It's at up 20 cents or 20 points. Let's take a look at the daily so we have a little more granularity. So, okay. So this is exactly what I'm talking about with regard to risk and really assessing what's going on in the market versus what you're doing and how much risk you're actually taking. So we have this massive, massive, massive falling wedge that everyone keeps talking about, but it broke out. It smacked into the 100 SMA, which it also did up here, if you notice. Look at that smack into the 100 SMA that I got circled. We're extremely far from the 200 EMA and the 200 SMA further up above. If you go to the weekly, look at these guppies. Look at those guppy. These are short-term moving averages. The 200, the 50, the 200 SMA and EMA, and the 100 SMA are extremely far above. So there's enormous bearish pressure from a technical perspective on this chart. What fascinates me right now from an intraday perspective is it's sitting on the 50 SMA on the daily. It wicked below twice, two candle body closes, so yesterday and today. So that is quite significant that support has held, especially this high close to resistance of the falling wedge. Um, that's meaningful, and we have to consider the long and short end of the curve and what we're seeing here. So the reason we had a massive breakout yesterday and today, really, in the crypto space, is because of the bearish price action of the dollar. The bullish price action of the dollar, we've seen with data that the steepening of the yield curve mutes the depreciative force it applies to the broad asset space. So what's going on is that the long end of the curve, the 30-year bonds, are also teetering on an edge. If you look in the weekly, they're basically sitting on the 100 SMA. You got to zoom in because this is really close, boys and girls. If this 100 SMA holds as resistance and the dollar breaks out, you're talking about utter destruction in the broad asset space. And if this breaks resistance uh, to the upside, I'm sorry, did I say break resistance to the downside? If it holds resistance to the downside or breaks resistance to the upside, and the dollar continues to fall, you're going to have an absolute firestorm on the broad asset space. So that's why I said we're teetering on the edge. And that means you really need to have a close eye on the risk you are taking. I like to remind you that I broadly think we're on the verge of the correction, and I'm much more interested in where the value is going to go rather than a crash. Crashes don't really get me excited. I don't have much fear, uncertainty, or doubt about what the process is. The process is a massive liquidation process, resulting in a reallocation of an immense amount of value to decreasingly risky assets that are yet to be inflated relative to the previously insanely inflated broad equity space. So we know where that value is going, or those destinations are going to be. It's going to be the commodities, mining, metals, and the crypto space. That's just the way it is. And you can maybe get a little bit more speculative and find some good gem picks in there. But broadly, those are the destination places to keep an eye on. Um, what am I missing? Lewis, don't forget to buy the no assignment I see. Oh, maybe. It was Julian Bouteloup did his S, STP, his stake protocol. I just put in my first order, keep it down, just a small sample transaction. I'm interested in seeing if it will be filled. Any tips on how to get these orders filled? So they're limit orders. So if a market is appreciating, you could put in a market price and the assets are appreciating. So you'll get the market price filled. But in a horizontal market or a depreciating market, you can't do a market price. For a limit order, you got to do it a bunch of ticks below. Drop it down like 3, 4, 5%, and you'll get your limit order filled. And the whole point is you're paying no gas for the transaction, and the keeper bots are going to arb the crap out of the market and try and get money out of the dark forest. And you're likely going to get some rewards, and that's something that a lot of folks are doing. They're underbidding the limit orders and extracting rook rewards because there's more profit that the arb bots can make when assets are trying to be sold for a less than market price. And that's the way that works. I think everyone should be trying it. It's really, really cool. And it's especially cool when you know what it's doing. And that's what's so fascinating about it. It's just really, really cool. Definitely get a kick out of everything that's going. Look at the price. That's really cool. I took risk off at about, what was it, 460 on the dip yesterday, and I sold the bottom. I don't care. I don't mind selling bottoms. My cost basis is $65. What matters is portfolio balance. Not getting gains is not the same as losing. What matters is the respect you have for your portfolio, the amount of risk that you're taking. I'm telling you right now, it's good to have risk off. USDC. And clearly it's getting 15.85%. I'm telling you, with Chase Manhattan, HSBC, you got nothing. This it would never, no one in their right mind would give you money at this point, and no one that knows any better. Come on, and you see what I got up here? I got sushi, I got 1 inch, I got Yearn, I got Alpha Homura, I got Curve, I got MakerDAO. Just the plethora of protocols, the DeFi Legos that are possible are just extraordinary. Everything has changed. It's nothing's going back. It's going to just keep accelerating and evolving. Captain Weber, thank you very much. Much appreciated. Simon Moore's tip. That's the name of the game. Bear in mind, if I showed you like the brokerage account, um, everything's through the roof. I got stuff up 5, 6, 7, 800% at this point. But don't. I'm not saying that out of a flex type perspective. I've been in that space since like 2016, 2017. Literally, I swear to God, guys, I watched 160K turn into like 8K. So it's not a flex. It's just that I was in and the market got destroyed. And for the love of God, 4 years later, I thank whoever's up there that I was right, and it's nice vindication to know that even though I held through a huge amount of pain, the value allocation was the right value allocation, and the market came to be. What I saw, the vision I had back in 16 and 17, applying to battery metals when Tesla wasn't what it was today. But Tesla started a movement, and I saw all of this playing out, and I was early. So everyone says there's a little difference between being early and being wrong. Yeah, I now know that firsthand. I was early. I was wrong. I could have saved a fortune if I got in later, but I do find satisfaction that in the end, at least fundamentally, I was right. Squanchy hooking it up with the $5. Much appreciated. Thank you for the education, sir. You're doing God's work. I hope I help. That's all I could ever hope for. It's everyone needs a purpose. And I like to think that I always thought teaching was a good purpose. A couple of folks in college, a couple of professors said I may end up teaching. That'd be nice. Crypto Chick, have you hit them likes? We got 34 people in the stream, 24 likes. We can do better. Hooking it up with the 299, much appreciated. Captain Weber 647. Not quite sure what that is, but it's a lot. It's a large number. Charlie G, I'm loving it like McDonald's. Yes, sir. I can tip Noah. Somebody tell me how. All I see are these tip bubbles popping up. Well, there's a button at the bottom. Looks like a little cash symbol inside the chat. Thank you, Lewis. No one needs to tip me. I don't do this for tips. Just tell me that you made right decisions. Tell me that when an asset starts depreciating, you got out before it started depreciating, and you were able to protect the value in some sort of interest-bearing allocation. And if that will make me so much more happier, that if my concepts and what I try and teach folks about risk and portfolio management and balance, if that pays off and you did right and you respected your portfolio, that's all the tip I'll ever need. Squanchy, Chip their chick, Captain Weber, Price of Rook, brother. Price of Rook is gorgeous. It's lovely. So bear in mind, if this thing breaks out, it's likely going to appreciate asymmetrically. Let's go back to the chart. So there's a huge amount of compression going on. So all of this time is the cycling of previous holders liquidating for a profit to new holders at the higher cost basis. So what you're going to have is, and it's a relatively illiquid asset, only a couple, 10 mil, whatever's in Uniswap at this point, which is the largest market. So when this thing rips, it could easily go just exactly what it did here. This leg is extraordinary. That is an extraordinarily valuable leg. It was a couple 100% right there. So there's no reason Brook can't go a couple 100%. Doesn't matter the price point. What matters is the percent and the relative liquidity that's available to the quantity of market participants that want to enter. Something like that. Price of Rook. Yep. Noah, any tips on taxes? Yeah, token tax. So I did my taxes. I did token tax, and I have like 30 plus thousand Ethereum transactions. It's completely impossible. But token tax does a nice job at aggregating the data and giving you your liabilities and your taxable gains. And what's most annoying about it is if you go over to TurboTax to try and input that information, TurboTax has no interest in a total quantity of transactions over 2,251. So if you have over 2,251, TurboTax tells you to enter one transaction, zero cost basis, and your taxable gains as how much you made. And then it'll apply the taxes to your total taxes due. So literally, this system is so broken that you could make a fair amount of money in the crypto space, and the IRS, based on TurboTax, because TurboTax is an IRS representative, that how else do the vast majority of the public file taxes? TurboTax specifically says if you have over 2,251 Ethereum transactions, we don't want to know about any of it. So that is absolutely fascinating. It just shows you how broken the system is, how deficient and delinquent a government agency that's responsible for value collections is. They are negligent. Noah, you have made me money, sir. Thank you, Squanchy. Thank you. Let's keep it let's keep it going, because you guys, this is all a bull market, and a bear market is inevitable. And even if there's a lull in the bull market and there's horizontal price action, what matters is really the accumulation of risk off assets and assets that generate recurring revenue streams that have resiliency in the face of depreciation, resiliency in the face of a bearish market, and that'll allow you to protect your value and basically live off it. That's the goal. Your advice has helped me tremendously. I appreciate that. Charlie G, Noah is the best. You can follow on Twitter and YouTube. Thank you, guys. Thank you so much. I really appreciate it. Let's take a look real quick at Bitcoin. This is what I have my eyes on. If anyone's on TradingView, you go look at any of the Bitcoin charts, Gemini, whatever, what have you, Coinbase. But BTC USD divided by Nasdaq. And that is the chart that I think is the most fascinating right now. 12:13 p.m. on a Thursday, February 11th. I thank everyone for joining. As always, 35 people in the stream, 24 likes. We can do better. I will see you tomorrow. Tell everyone to subscribe. I wish you all a wonderful day. Peace.